Welcome back, traders. This is Module 3, Lesson 3 of the OTE FX Master Course. In the previous lesson, we covered how trends move in cycles, directional push, retracement, and continuation. Now, in this lesson, we're looking at what happens before a trend actually reverses. Because trends don't flip randomly, they weaken first. This lesson is about recognizing early warning signs, not taking trades. Why this lesson matters? Most traders don't lose money because they enter too early. They lose money because they hold on too long, assume continuation forever, ignore the warning signs that momentum is fading. If you can read weakness early, you protect profits, reduce emotional decisions, and stop forcing trades that aren't ready. Weakness does not equal reversal. This distinction is critical. Weakness does not mean reversal. Weakness means momentum is slowing. Continuation is becoming less likely. A reversal only happens when structure actually breaks. So weakness comes before reversal, but weakness alone does not mean confirmation. Strong trend behavior. Before we talk about weakness, we need a benchmark. This is what a healthy trend looks like. Clear higher highs, clear higher lows, and clean breaks of structure at each continuation. As long as price behaves like this, the trend remains healthy and in control. Sign 1, failure to continue. One of the earliest signs of weakness is failure to continue. Price pushes, price retraces, but the next push fails to break structure. No BOS. Momentum hasn't reversed, but it has stalled. That hesitation is often the first warning sign. Sign 2, deeper retracements. As trends weaken, retracements often get deeper. Earlier pullbacks are shallow. Later pullbacks travel much deeper into prior structure. Structure is still intact, but behavior has changed. Depth often changes before direction changes. Sign 3, reduced momentum. Another key sign of weakness is reduced momentum. Earlier pushes are strong and decisive. Later pushes become smaller, slower, and less effective. Effort increases, but results decrease. That's a classic sign of weakening control. Sign 4, overlapping price action. Strong trends are usually clean. Weak trends often become messy. You'll see overlapping price, choppy movement, and indecision instead of clean expansion. Clean trends tend to get messy before they flip. Sign 5, reaction at prior levels. As trends weaken, price starts reacting strongly to levels it previously ignored. You'll see sharper rejection, stronger reactions, and hesitation at old structure. That tells you dominance is fading, not that reversal has happened yet, but that continuation is becoming less likely. One sign is not enough. No single sign confirms anything on its own. Weakness should be read as a cluster of behaviors, not one candle or event. Deeper retracements, weaker pushes, overlapping price. Context comes from clusters, not candles. When weakness matters most, timing matters. Weakness early in a trend usually means very little. Weakness later in trend near key structure means a lot. The same behavior can mean completely different things depending on what happens or where it appears. Weakness versus change of character. This is where many traders get confused. Weakness prepares you, change of character confirms a shift. Weakness tells you to slow down and observe. Change of character tells you structure has actually changed. In this lesson, we're still observing, not acting. Common trader mistakes. This is one of the most common mistakes traders make. They see weakness, enter counter trend early, and trade without confirmation. That usually leads to being too early and getting punished. Weakness alone is not permission to trade. Weakness is information. This is the mindset shift. Weakness is information, not a signal. It should change expectations, slow decision making, and increase patience. Sometimes the correct action is simply to observe and do nothing. Timeframe context. Context still applies. What looks like weakness on a lower time frame may be completely normal behavior on a higher time frame. Always ask which time frame controls direction. Perspective prevents mistakes. How this sets up the next lesson. This lesson has been about recognizing weakness, not acting on it. Weakness tells you momentum is fading, continuation is less likely, and expectations need to change. But weakness alone is still not confirmation. In the next lesson, we'll cover change of character. That's where weakness turns into structural confirmation. So think of this lesson as learning when to slow down, and the next lesson as learning when structure actually changed. So let's bring everything together. Trends weaken before they reverse. Weakness shows up as failed continuation, deeper retracements, reduced momentum, overlapping price, and stronger reactions at prior levels. Weakness prepares you, confirmation comes next. In the next lesson, we'll break down change of character and confirmed reversals when weakness turns into actual structure confirmation. If this lesson helped, comment weakness is information, like, subscribe, and I'll see you guys in lesson 4.